Governments love to tell you they're working for your financial freedom, promising stability and growth. But history reveals a darker truth. Governments have always used hidden financial tricks, recycled for centuries, to keep ordinary people broke while consolidating wealth and power. Their consistent purpose: transfer wealth upward and keep the majority dependent. Let's start with the oldest trick: inflation. When a government spends more than it can raise through taxes, it can openly tax, politically dangerous, or quietly debase currency. Ancient Rome mastered this. 3rd century emperors reduced the silver in the denarius. A once pure silver coin became mostly copper. The empire pretended nothing changed, but everyone paid the price. Inflation skyrocketed, savings evaporated, and wages couldn't keep up. It was a silent tax on the population, a trick still used today by central banks, essentially theft by stealth, making your money worth less. The Middle Ages brought forced loans. Monarchs in England, France, and Spain routinely coerced wealthy merchants and guilds. Refusal meant fines, confiscation, or worse. Repayment, if promised with interest, often came late, devalued, or never. Governments funded wars and palaces, while merchants surrendered capital. This coercion, disguised as patriotism, worked for centuries. By the 17th century, the financial system became the trick. When Britain created the Bank of England in 1694, it was for war funds. Wealthy investors bought government bonds, guaranteed interest payments funded by taxes. While sounding fair, ordinary people paid those taxes on goods like salt, beer, and cloth. The wealthy lent money, earning secure interest from the public purse. The poor paid higher taxes. It was a wealth transfer system, disguised as national finance, cementing a pattern. Lending to governments is the safest investment, guaranteed by the labor and consumption of the masses, a hidden subsidy from poor to rich. Fast forward to the modern world, and the tricks are everywhere. Take deficit spending. Governments run up massive debts, issuing bonds bought by investors, banks, and foreign powers. Politicians claim it's for infrastructure, jobs, or social programs. But much funnels into defense contractors, corporate subsidies, and bailouts. When repayment comes, governments raise taxes, inflate currency, or slash benefits. The debt appears for the common good, but the burden falls on the populace, while profits flow to bondholders and connected entities. Then there are bailouts. During the 2008 financial meltdown, banks' reckless bets nearly collapsed the global economy. Ordinary taxpayers paid through massive government bailouts. Who profited? The very same banks, emerging bigger and more concentrated. The trick was simple: privatize gains, socialize losses. The public was told this was necessary to save the system, rarely questioning for whom it was truly saved. Even government pensions and retirement are a sophisticated sleight of hand. For decades, people paid into these systems, trusting their money would be there. But governments often spend it immediately, leaving IOUs. The promise is future taxpayers cover the cost. It's a generational Ponzi scheme, built on continuous growth. When demographics shift, the system becomes unsustainable. Governments then reform it, reducing benefits, raising retirement age, or inflating away payouts. Your supposed security is an illusion. Notice the pattern? At every stage, the trick relies on perception. Inflation is called growth, forced loans duty, national debt investment, bailout stability, pension cuts reform. This language masks the reality: a continuous wealth transfer from many to few, bottom to top. History shows this trick worked for centuries because most people don't study economic history, understand complex financial systems, or see the trap until it's too late. In recent decades, tricks have become more sophisticated and opaque. Quantitative easing, largely unheard of before 2008, saw central banks create trillions out of thin air, buying bonds and mortgage-backed securities to stabilize markets. Politicians and bankers reassured the public it was essential. It worked for the financial system. Asset prices, stocks, real estate, and bonds surged. But who owns most assets? The wealthy. Average households saw minimal benefits, but suffered distorted markets and rising living costs. Money creation saved the top while fueling inflation and widening inequality for everyone else. Another modern trick is stealth taxation. Instead of visible income taxes, governments quietly tax via sales taxes, fuel duties, and especially inflation. When prices rise faster than wages, it's a hidden tax on your savings and purchasing power. Governments love inflation. It subtly reduces their massive debts. But for citizens, it erodes financial freedom. You might feel richer nominally, but if costs outpace earnings, you're losing wealth. This isn't a bug, it's a core feature. Inflation isn't an accident. It's a consistent trick to shift spending burdens without admitting it. Then there's regulatory capture. Regulations ostensibly protect the public, financial rules, safety standards, consumer protections. But history shows powerful industries influence regulators. Railroads, oil, tech, and finance all shaped rules in their favor. It's the own the referee dynamic. Governments use regulation to appear protective, but corporations carve loopholes that keep competition down and profits flowing. The public sees protection. Insiders reap profits. War finance is an old trick in new clothes. During WWI and WWCU, governments issued bonds calling it patriotic duty. People supported their nation, but these were lucrative, risk-free investments for the wealthy, guaranteed by future taxes. This pattern remains. Trillions for wars in Iraq and Afghanistan were debt-financed, benefiting defense contractors, banks, and bondholders, while taxpayers footed the bill. Wars are presented as temporary emergencies, yet financial burdens last generations. Governments also weaponize complexity. Thousands of pages-long tax codes, inscrutable financial instruments, jargon-filled budgets, all deliberately create an environment where citizens cannot track money. Complexity becomes camouflage. When wealth transfer is unseen, it cannot be resisted. In ancient Rome, debased coins were a physical sign. Today, it's opaque balance sheets. The trick is the same. Make it too complex and transfer proceeds unnoticed. Why does this matter now? These tricks are alive and accelerating. Inflation eats savings. Debt loads grow. Bailouts remain the reflex when markets wobble. Central banks manipulate money supply. Governments pass costs indirectly. The result? A system designed to keep you working harder for less real wealth, while elites grow stronger and wealthier, often at your direct expense. The profound lesson: these tricks always return. When Rome debased, citizens suffered. When monarchs forced loans, merchants lost fortunes. When modern states inflate and borrow, households bear the crushing burden. Different ages, same mechanism, same outcome. The harsh truth: most people never escape because they don't realize they're being played. They accept inflation, taxes, and bailouts as natural or merciful, believing government messaging over economic history. That ignorance is the most powerful trick. When the past is forgotten, its repetition isn't recognized. Governments and elites prefer a financially uneducated public. Financial education is resistance. Economic history is a weapon. Know the tricks, become harder to manipulate. So what should you take away? First, look beyond headlines. When stimulus is announced, ask who profits first. When inflation rises, remember its policy. When regulations appear, ask who wrote them and who benefits. Second, build real wealth outside the traps. Assets that hold value when currency doesn't. Third, never assume the system works for you. Systems protect themselves, not you. History doesn't repeat perfectly, but if you don't understand its patterns, it will crush you. The financial tricks draining your bank account today are the same as ancient Rome's. The only difference is whether you recognize them in time to act. If this gave you a new perspective, hit subscribe. History has the answers, and I'll show you where to look.